What's up, everybody? Welcome to the October 6th, 2025 IndiView Weekly Market Update. I'm Jeremy Bryan, and this is powered by Indy Wealth. Today, we're just going to get right into the hot button issues that are going on with the markets. So without any further ado, let's get going. First off, the government is in shutdown. We are now in shutdown. We officially went into it. And so now Democrats and Republicans are discussing the issues and the things they desire to get this thing back and running again. The market really has reacted with a very collective yawn at this point right now. Friday, we reached an all-time high, and we're up in the early part of Monday trading as well. So this isn't unexpected. If you look at history, and I've talked about this before, but if you look at history, government shutdowns usually don't lead to a protracted level of decline in the markets. They don't tend to be very highly correlated. Usually your decline is in that 1% to 4% range, 4% being a pretty aggressive one, to be honest with you. And it usually happens maybe beforehand as there's anticipation of it. But really, government shutdowns have never been, especially in the last 20 years, have never been really an issue for the long-term trajectory of the markets. And depending on how long we go, that could very well be the case here. The difference being is that, again, we're at all-time highs. We are at all-time high valuations of the market. So both of those things considered, you do have to be careful in saying history is a perfect precedent of what will happen this time, especially if we get a really aggressive shutdown where both sides trench in and you start to get aggressive layoffs, as President Trump has promised that he will try to enact. There could be some different issues here, but just on its face right now, the market does not seem to be very concerned by this government shutdown at all. And we're not seeing really any bubbles underneath the surface at this point right now that the market is in any way stressed about what's going on in the government at this point. So I'll let you know if that changes, but right now there just does not seem to be a lot of concern. One of the things that is a little more concerning to me, especially, is because of the government shutdown, we don't have economic data that we usually use to gauge the economy. And the biggest one right now that we missed on Friday was jobs. We don't have a jobs report. We do have some private jobs reports, whether that's ADP, whether that is Challenger. Those are the two private type of institutions that try to provide a job snapshot similar to the one that we get from the Bureau of Labor and Statistics. But they're usually not perfectly correlated. In fact, they haven't been correlated over longer periods of time. Now, again, the trajectories over long periods tend to be the same. Are we growing? Are we accelerating? Yes. Are we declining? Are we shortening? Are we losing jobs? Yes. They tend to start to agree over a longer period. But in a month-to-month frame, they can be very, very different. And honestly, one is usually not highly correlated with the other. So that makes it for a little different. We can gauge a little history with some of these private reports, but the Fed has decisions to make with regard to, again, this two-headed thing that they have to figure out is jobs are clearly are going the wrong way from a deceleration perspective. Unemployment rate is slightly going up. Honestly, again, it's still well below long-term averages, so I don't worry too much about that. But I do worry about job growth. And the economy and the economic sentiment right now around jobs does not seem to be overly positive. And so not having this data really loses one of those elements in saying, is this getting materially worse, that the Fed needs to be more supportive than anticipated before? But you have to counterbalance that with inflation data. And what is going on with regard to prices. There was information that came out in the Wall Street Journal this weekend that showed that over 60% of the items in the basket of goods that they use to measure inflation are rising over 3% year over year at this point right now. So while that doesn't mean the whole number is going to be over 3 and that we're massively accelerating, it does mean that it doesn't seem like we're on the trajectory towards normality anytime soon in inflation. And that's the two big Fed mandates: job growth, healthy economy, and unemployment, and then inflation control. So maintaining both of those while we don't have the data makes it a little cloudier from that perspective, and just trying to figure out what the next actions are for them. I said last week I didn't want to talk terribly much about the Fed, but this is more just from our information about what we're seeing and the cloudy components of it that we just don't have the economic data right now because of the government shutdown. Turning to a company within the market is AMD. Just came out this morning. Is up at the time of recording here was up over 25% because they struck a deal with OpenAI. It's an equity stake that they can combine, but it's also will supply you with chips. So pretty similar or slightly similar to the NVIDIA deal, but a little bit different in the effect of NVIDIA is taking a stake in OpenAI, and this OpenAI is taking a stake in AMD. I won't bore you with too much of the details here. The bigger thing for me and from seeing these deals and seeing the acceleration is, to be honest, I have to take a little bit of a mea culpa here. I was talking almost a year ago at this point about the potential for the chipset companies to hit a wall of supply growth. Is that, this AI expansion and all the data centers and everything we were building eventually gets overheated, right? Is that there's only so many chips that the Googles, the Facebooks, the Amazons, the Microsofts, there's only so many chips they buy to warehouse their facilities. And then they start saying, okay, I think we're full, we're going to stop buying. And then the price collapses. It just has not happened. It has completely not happened. They have not been, they are building capacity to the greatest extent, honestly, that we may have ever seen. They really believe in AI infrastructure as leading to value and productivity over a longer period of time. And they believe they're not at a level of saturation or anywhere near levels of saturation at this point right now. So it doesn't appear we're there. I would suggest that the deals that we're seeing and the numbers they're throwing out, we'll hear from the companies are going to start reporting. I look to Microsoft, Amazon, Meta, and Alphabet, and kind of those companies that we would want to look at in that space to understanding. I guess Oracle is probably involved there now too. As companies, we really want to pay attention to for how much they're going to spend on AI in the future. But really, I mean, from every indication right now, there doesn't seem to be at least demand wane at all. They seem to still be going all in on these things. And just as importantly, the market is rewarding them for when they're saying they're expanding the opportunity. Because a lot of times it can go the other way, is that, oh, the capital costs of this are going to be accelerating over a longer period of time. That's less free cash flow. So people get concerned that they're overbuying and they hurt the stock. Right now, everybody's being rewarded for adding additional capacity to their AI expansion capabilities. So the market's saying, go, 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 keep doing it. So they're going to go, 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 keep doing it. We'll see when this ends. Eventually, these are cyclical. They don't go up and to the right forever. These are cyclical companies, but I was way too early on the anticipation of a cycle changing over. We haven't seen any evidence of yet. And really, I'm going to keep paying attention for changes on that. But right now, I just don't see it. Lastly, coming tomorrow, we're going to have our quarterly update. So a little bit more robust look at what's going on in the economy. Again, I won't have some of the data points, unfortunately, with a government shutdown, but I'll use whatever data points I have and whatever we can put together to really decide what we're seeing from a snapshot in the economy right now, what we're seeing going forward, and how we would react. That's what we would do from our perspective on the quarterly update. So tune in tomorrow for that, which is a little bit, again, a more robust look at what's overall happening and actions we would be taking from what we see going forward. So until then, thank you very much for joining me today, and tune in next time and next week where we'll have our next Top Button Topics. Until then, thank you and take care.